Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. Today's Thursday, it's October 26th, and it's about 7:47 in the morning. The market's going to gear up to open up in about an hour and 43 minutes, if my math is still correct. Now, we've got a lot to talk about today. As you can see here, the Nasdaq is down 165 points. Yes, 165 points. This is not random. Matter of fact, this is equivalent to the Dow being down about 350 points, because look at the value of the Nasdaq and look at the value of the Dow. Now, the Dow's down only about 172. You could see that there's definitely money coming into blue chips and away from tech stocks in light of earnings. Now, in terms of earnings, we had earnings on Google. Just to give you some feedback here, the number was awful, and the stock is now trading below the 100-day moving average. We also had earnings on Meta, and Meta is trading also below the 100-day moving average. This is not good. And actually, they beat expectations, but their forward-looking statements were no good. Now, tonight, you have Amazon reporting, and we're going to see what happens here, but this is part of the consumer discretionary, and we're almost near the 200-day moving average. So today's going to be a very important day. Now, just to give you a little update, we're holding Tesla short. And a lot of folks were saying, Roger, why did you hold Tesla? I mean, you sold it right here. It went all the way to 222. Yeah, but look at where it is. Look at where it went. It went to 222, but it still was at the 200-day moving average. Then yesterday, below the 200-day moving average. And now it's about $3 away from our entry. It'll probably fill the gap and go higher, but I'd like to see if it breaks a little bit lower before we liquidate the position, because I think it'll break this lower level here or possibly test this level before going higher. So still short on Tesla and still long Etsy. Now, looking at the bond market, as you can see here, we're still below the 8-day EMA. This is a very, 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 very bearish bond market. This puts interest yield. Remember, there's an inverse relationship between bonds and interest rates. So the lower the bonds go, the higher interest rates go. And this is like a 8, 10-year high, or maybe a 12-year high. I don't remember the number, but a multi-year high. And the Fed can just now step back because the market is doing most of the work for them. The market is raising rates without them doing anything, so there's a higher degree that they'll just stand back and say, hey, interest rates are going higher without us. It actually is a perfect environment for them for a wait-and-see scenario. Now, looking at the SPY, you might or may not remember, but I told you there's a strong odds we're going to hit this line, this purple line. And if you look at where we're going to open today, it's not that far away, and it's not a big stretch for us to hit this level. Maybe trim some stops around here. There's a lot of stops, and then go higher. But I still believe we're going to hit this level because earnings for Amazon are not till tonight, and there's several other companies coming out. And I don't think market participants are going to want to get too bullish before Amazon comes out, because it is the largest consumer discretionary stock in the world, right? I mean, well, Apple's more of a tech stock. Amazon is more of a consumer discretionary stock. Although, if you put 100 people in the room, you can argue both ways, and none of you would be wrong. Amazon is a tech stock, and it's a consumer discretionary stock. Apple is a tech stock, and it's a consumer discretionary stock. But we go where the sectors are. And if you look at XLY, which isn't doing really well, and it's already near that level. And by the way, it looks very much like Tesla. You will look at the constituents, you will see that Amazon has 23% of the value and Tesla has 17%. And Amazon is reporting today. And if Amazon is no good, what do you think is going to happen to Tesla? The correlation is very high throughout the sector. So we're going to be watching Tesla, Amazon very, 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 very carefully today. Looking at the QQQ, we're not at the 200-day moving average yet, but we're below this long-term line that we drew a while back. That's a break. That's a break of support, and there's nothing really here till the 200-day moving average. So there is a very strong chance that the market can go lower before going higher. Now, do I think we're going to have a major bear market and we're going to fall apart? No, I don't. I think the market's going to be stable. I think we're going to have a shakeout and we're going to go higher. But I think the next couple of days are going to be very tumultuous. And yes, I am going to be looking for bulls turning around, but I'm not going to be counting on it. I'm not going to be counting at all. Now, looking at individual sectors, utilities, energies, blue chips, consumer staples, that's where the money is. That's over the last 3 weeks. Over the last week, utilities, consumer staples, that's where the money is going to. The Dow, healthcare. This is where you want to be right now. I would be very, very careful with technology. I prefer actually industrial better. But honestly, utilities, consumer staples, and Dow to the long side. Blue chips, blue chips, and blue chips. And you don't want to be in tech right now till after this earning bonanza is behind us. In terms of energies, they haven't been doing so well last few days. Consumer discretionary, that's Tesla and Amazon. Home builders, we had a report yesterday. I'll talk about that. Permits. Homes are being built, but permits are declining. And today we have existing home sales. And energy has not been doing well because there's a higher degree of a recession with earnings being bad. Now, let's look at the global view, and then I'll get into individual stocks and sectors. So Meta fell over 2% in pre-market trading after the company reported better than expected earnings, but warned that advertising business depends heavily on the macroeconomic environment. Same thing for Google. And by the way, you think Amazon is in a different category? You think their spending is going to be foolproof? You think people need all those things that Amazon sells? Consumer discretionary, not consumer staples. That's bad. This is very bad for Amazon. Google said the same thing. That Alphabet slid more than 2%, extending yesterday's drop on disappointing cloud figures. Those are all sales numbers. Those are all consumer demand numbers. Nasdaq is now almost at a 5-month low. Don't say I didn't warn you. ADP stumbled more than 9%. Thank you, ADP. We took advantage of it, shorted it yesterday and made money. Microsoft, actually one of the few stocks that actually did well and broke through specific levels. If Microsoft didn't give us some strength yesterday, it would have been messy. Economic data shows, and this is what I was talking about, new sales rose 12% to a 20-month high, which is great. But building permits came in weaker than expected. Not by a huge percentage, but if permits are getting weaker, then there's going to be less homes to sell. And if there's going to be less homes to sell, then this number is going to be declining. Today, we'll see existing home sales. I'll be shocked to see the numbers higher in light of the higher rates. There's 0%, well, there's a 2.9% chance that the Fed is going to raise rates next month, and there's a 29% chance they're going to raise in December. I actually think they're not going to do anything till January or February because, as I said, the bond market's doing all the work for them. Oh boy, today, Amazon, MasterCard, talk about consumer stocks, right? Merck, not so much. United Parcels, not so much. Altria, definitely. Ford, yes. But MasterCard and Amazon and Intel, big stocks. If orders are falling in Intel, if Amazon beats revenue but says that things are slowing down, which I believe they are, oh boy. Today, all eyes are focused on GDP. This is a big number. It's coming out at 8:30 in about 35 minutes. You will have this video before that reading. It'll be a very important reading. But again, the Fed is not in focus right now. Earnings are in focus right now. So I think even if this number is not amazing, it'll be okay. Durable goods. Tomorrow we have the PCE number coming, or the PCE number coming out, and that's going to be important. That Fed looks at that, but I don't think the GDP is going to be as important as earnings right now. Pending home sales. I'm very curious what this is going to be. I'm watching home sales very closely. Initial jobless claims, this number has been amazing the last year and a half. It went to about 270, 280,000, and then it just came back to 200,000, and it's been there. The job market has been fairly steady, maybe a little too steady, which is inflationary, because then employees are in control, not employers, and they can ask for more money. So because there's a lot of employment available right now. Not where I live, but throughout the country. Europe down 1.2%. Poor corporate earnings. They're keying off of U.S. Auto stocks and bank stocks fell. China closed higher, giving us a little tailwind, continuing its positive momentum from previous two sessions. Government announced a 1 trillion yen bond issuance, state fund buying. Nikkei closed sharply lower today as a spike in bond yield and concerns surrounding Japanese monetary policy dampened investor sentiment. Chip stocks stumbled on Thursday, mirroring overnight declines in U.S. counterparts, and Intel is coming out with earnings today. IBM came out. Adobe with earnings. They were okay. They got upgraded. Adobe is still looking good. If these stocks dump today, it's not going to be good. If Amazon dumps today, it's not going to be good. And Google slipped more than 2%. Amazon, MasterCard, Merck, and BMY, and Intel. Intel. Let's take a quick look at Intel. I bet right now it's not looking all that great. Down overnight, down, ooh, right at the 200-day moving average. Be very, 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 very careful. I mean, I don't know how else to explain this to you, folks. Look at this. We are below the 200-day on the SPY, and again, I think we're going to hit this level before, or maybe even breach this level before going higher. So we have to be very, very careful. And yes, we're still short Tesla, stubbornly still short Tesla. Now, before I conclude, today is Thursday, and Thursday I give you the best ETF to buy. And by the way, make sure you subscribe to our Telegram channel. Free trades till we start the day trading room. And in the VIP room, which is at 11 a.m. today, we're going to talk about the hottest stocks. It's no cost. You could find all the links below in the YouTube channel. And by the way, subscribe to the YouTube channel and subscribe to Telegram. You'd be nuts not to subscribe to Telegram. You get free trades. So what sectors are looking better and better and better? Well, consumer staples are starting to really spring up. It makes perfect sense in light of the economy. Utilities and consumer staples I really like right now. Do I like anything else? To be quite honest with you, I don't. Everything looks crappy. I mean, look at communication. Whew. Look at that. Just fell off like a rock. So I'm not happy with what I'm seeing, but I'm really liking consumer staples and I'm really liking utilities. So my suggestion right now, seriously, if you're going to buy 100 shares, put 50 in XLU and 50 in consumer staples. If you're going to buy contracts, buy one utilities, buy one consumer staples. And if these two babies, if utilities breaks above 60.17, we're going to have a little rally. If we break above 68.58 on consumer staples, we're going to have a little rally. So let me give you some options for both. All right. I really do like these right now. And it makes perfect sense that they're holding on when, all the tech stocks are doing terrible. So you still have 8 days left. Let's go a little further. Let's go to 15 days. Now, if nothing happens in the next 3 or 4 days, don't stay in these. Don't give these too long. They don't need much time. And they'll probably go up if the tech goes down. So it's a really good hedge to have. I would go in the money to the 66 strike price right here. They're going to open up. They're going to get tight as the market opens. It'll set you back about $2.50, but that's where you want to be. And again, they'll get really tight after the market opens. That's on the consumer staples. And on utilities, 15 days out, again, if 2-3 days nothing happens, you don't want to be in these. You want to be in the 58s. And again, they'll get very, very liquid. Both of these options are around $2.50. They're not expensive. And again, don't give them more than a few days. And most importantly, you want to see them break above this high. If they don't break above this high, if they just come up here and then come right back down, it's not going to be good. But I think they're going to come up here. And XL, what was that? XL consumer staples is right here. XLP, sorry. A little early still. Same thing. They need to break above the 68.57. But honestly, I like how they're looking, and I like how they're above the 8-day EMA. If they start trading below the 8-day EMA, this little red line here for a few days, if they start falling back down, you don't want to be in them. So you only want to give them a few days. I'll be giving updates throughout the day today, and I'll record a video for you guys and put it on Telegram of how to pick liquid options. Okay. Now, before I let you go, this is amazing. Wait till you hear this. One of our brilliant traders, Jeffrey Turnmeyer, has hit 64 straight winning trades. While you may have missed out on the 40th, 50th, even 60th, are you really going to miss out on the 65th win? I don't even know how mathematically it's possible to get 64 winners in a row. But Jeffrey's an amazing trader. Look at this, 64 winners in a row, 65th on the way. You don't want to miss out. You'd be foolish to miss out. Do not make the mistake. My good friend T-Buzz, Tom Busby, he's sitting down with Jeffrey at 2 p.m. today. Nice, convenient time, Eastern, to learn how to get in on the very next trade. They'll also reveal the ticker behind trade number 65, so save your seat. I didn't know about this. I'm about to join this program. 64 winners? When I read this, I wanted to make sure it was real. 64 winning trades. Jeffrey, my hand's off to you, buddy. That's amazing. I love it. That's the kind of people we have at the Trading Pub. All right, guys, have a great day. I'll see you at 11 a.m. in my VIP room, and we're going to have a lot of fun. I'll be updating Telegram throughout the day. Bye.